Friends, realtors, fellow originators, hope this message finds you well. This is John Murphy reporting from Indianapolis, Indiana, giving you my current hot takes on what I see happening in the real estate market today. Because there's so much information, there's so much for you to look at, consider, and even digest as a consumer. The information's almost too much, so I thought I'd cut through all the information and shoot you my takes for this week of what I believe to be the most important headlines and things to consider in the real estate space when it comes to residential financing. So the first question on everyone's mind, as it has been for the while, is when are rates going to come down? If you're a homeowner, you're hoping that rates come down so you can save some money and get your down payment lower. If you're an investor, you hope so you can make some more cash flow on your investments. If you're a realtor, you're hoping this drives more sales and unfreezes that market of all the people with paid off or 3% mortgages. So let's talk with this. So one of the things happening that comes out this week is that the jobs report has been revised. So this idea that the Fed is going to pivot is getting pulled out of the market. And I even saw it this week. Fannie Mae, Freddie Mac revised all their 2025 findings for where they thought rates would be. And they did what I thought they'd do. They went dead center. They've gotten it so far wrong to this point because we all priced in a series of price cuts that were going to drop rates and totally radically change the market and make things more affordable, and they haven't. I actually read this article this week that said the U.S. housing market is still struggle for first-time homebuyers. Here's some crazy stats that I don't think you follow, but to keep in mind is if you're looking to buy a home or sell a home. The typical age of home sellers in 2023 was 60 years old. So if you're younger than you own a home, congratulations. If you're over 60 and own a home, you can still get in the space. The next piece, the typical first-time home buyer right now is 35 years old. Now, this is a nationwide statistic. So if you're younger than that, kudos to you. If you're not, there's still time. But one of the issues I have with the narrative of rates going down and when the cut's going to come is this idea that affordability is going to be driven by some external source outside of ourselves. Because when I talk about rates, you can't control rates, right? You can't control the market. What's the most important piece when it comes to rates? Your budget and your affordability. The idea that some outside source is going to change the marketplace to all of a sudden part the seas and you magically find the deal of the decade and it just happens by circumstance is a misbelief. It is a fallacy. It's not going to come true. So when you hear these states, the average home owner is 60. The first-time home buyer is 35. The average move-up buyer is 58. The number of years a seller typically lives in a house before selling is 10 years. The percentage of sellers who work with real estate agents is 89%. The percentage of sellers who sold by owner is only 7%. The percentage of buyers who work with a real estate agent is 89%. And the percentage of buyers who paid more than asking price is 25%. So back to this narrative about when rates are going to come down and being a first-time home buyer, you have to start making a few business decisions. And a business decision is a decision you have to make regardless of how you're feeling, of the timing. You have to run it like you're running a business. Like you got to make payroll on the 1st and the 15th. You have to make this idea concrete in your head when it comes to rates dropping and making a good decision, which is this. If I'm going to participate in the market, I can't time the market. I can only participate in the market as it is right now. Because back to how all of us priced in rate cuts and hoping there was some relief coming from the federal government in 2024, it's not happening. So as you hear these stats, you hear the ages, you have to make a decision regardless of rates, what your budget's going to be and what's going to work for you. Because along with rates coming down, we got to talk about the bigger issue, which is inflation, which is what our government's really holding out for. And they're trying to squeeze where they don't want to cut rates and then have to go back and raise rates again and make a misstep. They're trying to avoid that. So when we talk through inflation, again, I read an article this morning that said inflation isn't likely to come down to the 2% that the Fed targets, said two prominent economists. And in this article, it really unboxes this, which is there's a data issue. They think inflation is stuck because all the while that our Fed is trying to raise rates and extract liquidity out of the market, our federal government is still spending money like crazy. So again, back to those rates going down, where are you getting your info and what are you waiting for? Because as you watch this video today, one of my hopes is as you see it, is you become do a better analysis of information. Because rarely in life does everything come to you crystal clear. You have to say, hey, if I'm going to buy a house right now, what am I waiting for? What are those pieces to it? Because this idea that affordability is coming back in the market or that, again, that something's going to change magically for you is just not the reality. Inventory is going to be constraint for the next longer period of time in certain markets. In other markets, it's softening, like in Florida or in other places like Arizona. The market's softening where there's more supply than there's been in years. But back to that initial question, when are rates going to come down? You cannot decide if you're going to buy a house in 2024 for when rates come down. What it's going to cost you is far exceeding whatever interest you overpay in your mind for that house. Because one of the issues that first-time buyers struggle with, and one of the stats that I think is important to remind yourself of all the home buyers right now, 32% of all buyers are first-time home buyers. So what first-time home buyers don't realize is that, again, you're naive to think that at any point in time that the best deal, that the opportunity for that perfect home was going to come to you. Because one of the lessons I learned early in my career when I bought my first home was that I didn't know it was a good time to buy. I just knew that the government was giving away $88,000 to be a first-time home buyer in 2008. And I bought two houses on one lot for $105,000. And at the time, I felt like that was even too much money. The rate was 7.5%. But again, looking back, it was a smart decision. But in that moment, a lot of my peers were not buying homes, even though they were heavily discounted. Because one of the root issues that first-time home buyers struggle with is this misbelief of timing the market. They genuinely believe they can time the market to pick it just at that right time to bring that affordability in their life. And what's the reality of it? No one can time the market. There's only one group of people in the whole marketplace. When I say this, I mean all the economy, the stock market, all of it is the market makers. And there's very, very few of those right now. What I consider the market makers that are truly left are like the Magnificent Seven, those stocks that are in the S&P 500 that pull all the gains up. But if you're a first-time home buyer, what you really have to be focused on right now is your personal budget. Because what you're reading in the headlines, and I'll flash a lot of the videos behind me, is that you see headline after headline, which is you should have bought a house in 1982. Affordability has never been less. So let's break down this affordability kind of language and this, what they say housing crisis is, so you can empower yourself with better information. When you read the data, when they say we have a housing affordability crisis, it's twofold. One of it is that they say the home price is just too high, right? So home prices is one piece. The next piece is interest rates. Okay, so they say the interest rates are high relative to the home price, and then they benchmark it with wages. That is what the breakdown of affordability comes to. So what's the issue with this whole kind of dialect of what it is? Most people lose the ability to say, hey, I can still buy a home, because if you're looking at mass media, it's easy to get swept in the wave and out to sea and say it's hopeless. Back to that affordability piece, affordability is a relative term. If you look at every single person, again, going out to lunch every day might be considered unaffordable, right? Getting your groceries shipped to your house might be considered unaffordable. Budget is specific to you and your financial circumstances, just like rates and trying to time the market. You have to make a business decision on what you're going to do with your life. Because if you want to buy a home, that's why companies like ours exist, is that you have to make a business decision saying this: when is the right time to buy for me? And here's how I equate it to. Number one, you need to start with a budget. Most people who call into my office and are first-time home buyers say they want to buy a home, but they don't know their budget. So that way they have this thing called payment shock when they go to look at what a house would be, right? They go say, hey, I'm paying $1,000 in rent. I want a house for $1,000. Unfortunately, unless you buy in certain areas, it's very difficult to get a house at that payment. So when we go back to this affordability piece, it's a general term based upon all the data in the marketplace, not necessarily for you. So when you look at this and we start creating budgets for you, it's all about how much money you make, not the guy next to you, not the person down the street, or this ideal life where somehow you're making all the money in the world and you can buy this dream home. Because one of the things you have to remember when we talk through getting in a home is that you can only control you, right? You don't want to be one of those persons that lives to this ideal and this perfect life and a perfectionist that never takes action, because you never get in a house. Because payment is only one of the reasons people buy homes. So the next piece with being prepared is that you got to get in the game, meaning you got to talk to a mortgage professional and get your credit pulled and provide your pay stubs and look at all your information so we know definitively what you qualify for, or worse, what you don't qualify for, so you can narrow down your search. A long time ago when I started buying homes is I realized this quote, the deal of the decade comes once a week. Now everybody says, John, that's easy for you to say. You've been doing this forever. But what I mean by it is that if you're not prepared and that deal comes across your plate, you're going to miss it because number one, you weren't paying attention. Number two, you weren't ready. So it's so important when we talk through being a first-time home buyer and preparing for the market and the things to come that you're doing the due diligence. So when the opportunity arises, you're ready to go. Because that is the ultimate shame of life is that you have resources at your fingertips and you don't use them. You have opportunities come to you and you pass on them. Not because you actively said no, it was because you just missed, right? That is the ultimate failure, that you don't realize the potential you have because you weren't prepared. So back to where I started on this long talk about when rates come down and affordability, where we're connecting the dots and first-time home buyers, you have to get to this point. You need to make some business decisions about you. Because one of the issues in the marketplace right now is when people hear it's affordability crisis, lack of inventory, it almost puts this premise of home buyers versus home sellers. Because one of the issues people have is they think the seller has the upper hand no matter what. They think that the seller cannot be negotiated with. You need all this money to buy. You need all these things to even get in a home to see a house. And it's actually the complete opposite. Because general headlines are good for news and causing outrage. They're bad for decision making because your decision is specific to you and your situation. So when we look at this and we talk through this idea of who has the upper hand in the market, I think it's very important you realize this. It's all relative, right? It's all about the specific home and that specific seller. Because I can give many examples where there's still opportunities to buy and put yourself in a good financial position in every single market in America if you're prepared and you're ready and you do the specific steps for your market. I hate giving advice that is so general and broad that it disempowers you to take the next step, which is doing your research, reaching out to a mortgage person, or better yet, paying cash for a home because you've done the research and the homework. Because one of the issues when people say rates soar to 7% is that this, historically speaking, a 7% rate isn't all that bad. What it is it's bad compared to 2021 when rates were in the 30-year fix was in the upper twos, right? So it's all relative to that piece. So if you're a first-time home buyer and you're somebody looking out there to get in the game, if you will, buy your home, or even if you're an investor, you have to remind yourself is that all things are relative to the current market condition. Back to that affordability, wages, mortgage interest rates, and purchase price. So again, if you're on a tight budget, maybe you buy in a small town with a lesser purchase price where there's less competition. If you're like, hey, I want to live in Chicago or another big city, that's a different conversation. But the point is still the same. It's about getting in the game and doing your research. Because if you follow these headlines where it's this competition and that everybody's, it's a zero-sum game, winner take all, you're never going to get in the game because you're going to fall prey to those headlines which disempower you. Because what this article goes on to talk about is that what determines a seller versus buyer market. And I think it's worth unboxing and talking about on this video. So if you're watching it from home, you know what to expect. It's when a seller's market is when the demand of buyers exceeds the number of homes for sale. And you'll hear this number often. And it's market to market based upon historical data that determines what is the right amount of healthy inventory. Okay, are you following me here? So when we look at this, the last time it was truly a buyer's market was almost up to 2018 and 2019. It wasn't until the hysteria of COVID and the pandemic that these home prices went up like crazy. So certain markets, here's a story for you. A friend of mine calls me and wants to buy a house in Naples, Florida. It was a beautiful 4-bedroom, 2-bath house and a little bit off of the main drag of Naples. In 2019, this house sold for $295,000. In 2020, the house sold again for $525,000. It sold again in 22, just a year later, for $625,000. And now in 2024, it's on the market for $695,000. So again, if you're this home buyer, you're looking for these data, there's different things in each market that's specific to it. So what's happening in 2024 is rates have gone up and supply in Florida has gone up. You can't get insurance. There's all these other issues. That is when the market flips to going to a buyer's market because the amount of supply exceeds the amount of buyers. So I share this with you as you talk through this and you look and do your research. You got to realize everything is specific to the market you're looking in. Because again, as I started this, you cannot control or time your purchase timing of when you're going to make your buy decision based upon rates, because so is everybody else, right? You can't make your buying decision because you heard a headline that says it's an affordability crisis and there's no way you can buy, because it's all about your personal finances. So it's so important as you watch this video that you realize you should be empowered to make better decisions versus the idea that somehow the market's going to dictate when you should buy and get in the game. Because as we keep going down this path, there's a big discussion to be had. And what that discussion involves is the American dream dead? Right? Is the American dream of having that home with the white picket fence for your kids to live in and get married and create this life you want? Is that dream dead? Is it not possible because rates went up that you couldn't do it? You couldn't buy a house? Because a lot of people have gotten so short-sighted with how long this data has been out there. If you look at the history of when they started tracking the mortgage rates from 1955 to present, you'll see rates have been much higher than 7%. You'll see that, yes, there was other times where the prices were lower, but again, so were the wages. So everything when we talk through buying the American dream, you have to remember this. We are in an era where, again, crisis and outrage sells. The media loves to get people's skin going. They love to post on social media where everyone in social media posts things to the ideal that somehow you're going to be out of the track or out of luck to get involved in this game. So as I look through this and I talk through, is the American dream dead? We have to say this. The first thing I always talk to anybody when it comes to buying a home or getting prepared to buy a new home is about this concept of being prepared. Because what I will say is this about buying a home. Price is only one factor and monthly payment is only one factor in getting in your home. Because again, the stability, again, setting your family up, creating memories, all these other factors in buying a home, in my opinion, are priceless. The payment is secondary to, again, getting in that home that's safe, secure, and in the right area for you and your family. So again, when we talk through, is the American dream dead? My fear for the average person who's consuming information on the internet is that it's a hopeless effort, that no amount of effort is worth the work. And why do I say those words of hopelessness? Because I feel like most of us spend more time on our cell phone than we ever have before. And we always compare our life to some perfect ideal of some person we don't know on Instagram, Facebook, whatever social media website you look at, and you lose track of the power of yourself and staying in your game. Because you know what focusing on your competition does for you? Seriously, what does that do for you? Nothing. Because you can't do anything with your competition. You go to this place where, again, you just make yourself miserable because, again, you're thinking about all the things you can't control and you can't change. Because one of the things you have to learn if you're watching this video on any of the channels is that you have to learn this. I'm all about empowering the individual to take action today. Because you know what those small actions lead to? Bigger actions. So back to the American dream, what's possible is that, again, it's all about location that you're looking to buy the homes. I'm in Indianapolis, Indiana, and every single week we have investors from around the country calling into our office to get qualified to buy a rental property in Indianapolis, Indiana, from California, from New York City, from upstate Seattle. All of those places call in because the efficiencies of Indianapolis, it's still affordable. So when you read those headlines saying affordability crisis, it could be talking about San Francisco. It could be talking about LA. It could be talking about New York, New York. It's probably not talking about Indiana or Buffalo, New York. So again, you have to be a better consumer of information and push back and never leave any of these social media websites that you visit with the thought that it's helplessness, that you can't do anything to make a difference. Because I truly believe the American dream is alive and well. If you look at our border right now, again, just today, our president made changes to what he believes, again, building the wall, these things. People want to get to our country because it's the best place to work and live and thrive. You can make a great living here. So if you're watching this video and you're interested in buying a house, what you have to really look at is something much more simple than the idea that it's rates and home prices. And again, it's a pointless chase. Because when you look at this piece and you talk through buying your first house, the first thing you got to figure out and what you really need to do is reach out to a lender if you don't have the money to buy it outright. And if you do, more power to you, right? But you need to get in the game and see what's your credit score? What's your income? What's your cash available right now, even if you know you're not in that place, to be transparent so you can make a functional game plan that you can implement today. Because again, it isn't necessarily you're going to buy a house in a week, a month, or even 6 months. Maybe it takes 2 years, but you're eventually going to get on that track by being a participant in the game versus watching on the sideline. Because one issue that I feel like when I talk to people about getting pre-qualified for a home, that they get frustrated and they get down because, again, much of what the news points out is all the things wrong with the world versus the things right. Right? They talk about the polarity. One of the articles I have here today in front of me talks about why you should buy in a red state versus a blue state, right? They're trying to polarize our country in the news. What I'm trying to do is empower you to make better decisions. Because one of the things I read about is they talked about the minimum wage. And I saw in one state, they upped the minimum wage to $20 an hour. And I thought to myself about inflation, we talked about high rates and all these things. One of the issues when we talk through minimum wage, what I think about is minimum wage is the minimum, not the maximum. That's the starting point. Because at any job I've ever had, yes, I started at the minimum, the lowest wage, but as I worked and showed my body of work, again, you do the easy things well, you get promoted. Companies want to reward and are built by great employees who are diligent. They want to incentivize you. They want to retain you. They want you to show up for work and do extra shifts. But again, what the government and the narrative is pushed out is that we need these minimums to protect the consumer. And what we realize is we drive up the cost for everybody. And then those very people they're trying to help, they end up hurting. So back to housing, what that does to housing, again, is the same thing. We are driving up rents. We're driving up costs. We're driving up utility costs. We're driving up the cost of materials. So again, when you look at this idea of getting in a position to find an affordable house, it's specific to you because your wage is your wage. You can't worry about the next person's wage. The rate's the rate, right? There's nothing you can do to cut the rate down by 200 basis points. If it's 7 today to get it down to 5, you can't do anything about that. And then you can also do something about down payment and saving your money because that's the next piece. Most people indulge so much that they have so many expenses that they burn up all their money on that by the end of the month, there's nothing left. Because that's the next piece about the modern world. Now it makes sense where people like Dave Ramsey or Susie Orman or any of those talking heads that people usually say is cliche, it makes a lot of sense. We have people every single day right now pulling out second mortgages on their 3% rate home to pay off credit card debt, to pay off cars, to again, take all these spending things they've done and wasted money on versus, again, being disciplined and just saying no, right? We live in this era where everyone wants to not compromise on things, but will compromise on everything else because we'll delay this future because this learned helplessness. People think so many things in life are hopeless right now because, again, they don't realize the power of compound effort every single day and sticking to a goal. Because when I look at the affordability crisis, what I really think is it's a great headline for news. It's a great place to talk to about to get outraged and say, here's what's wrong with the world. What I think the real narrative should be is that we need to have a personal responsibility crisis where we say this, we're going to teach you all the best information. We're going to come up with game plans to empower you to take action. And we'll give you specific examples of how people just like you have done the exact thing you're trying to do, which if it's buy a home, buy a rental property, get in real estate, sell more mortgages, any of those things. It's all a very real possibility. But the problem is still the same, this learned helplessness. Because as we look through the headlines, we got to start asking a very important question. What's this going to do for me? Because whatever your goal, and let's say it is to buy a home, every single day you should ask yourself when you wake up in the morning, like, I should go out to breakfast and get Starbucks. Is this getting me closer to buying a home, right? Hey, when you're at work and your colleagues are like, hey, let's go out to a $25 lunch. You got to ask yourself that question. Is this getting me closer to buying a home? Because the game plan to home ownership is fairly simple. It's not easy, but it's fairly simple. What most people do wrong is the modern day indulgences crush them before they ever get started. The amount of people who have a $700 a month car payment is outrageous. The amount of people with a $300 a month cell phone bill is outrageous. The amount of people who are going out to eat regularly and spending hundreds of dollars is outrageous. The amount of people who won't live in the lesser apartment or lesser townhouse is outrageous. But we can all point to the idiocies of the world, but it isn't until we look at our own that we get change and that we can make a difference. Because back to that, when are rates going to cut and when's the world going to change? We cannot control that. But what we can control is our personal actions and our personal responsibility to make those small changes, right? So again, when you're thinking about this and you're watching this video, I want you to be crystal clear. The takeaway from all of this is that you can get in the game. There's tons of loan products out there to help you. There's down payment assistance. There's all types of different things. But it requires you to take the first step, which is to reach out and look at what's available to you so you can come up with a game plan. So again, as I sign off today with this rant from Indianapolis, Indiana, John Murphy, is that I want you to know this. We can't control rates. We can't control inventory. Frankly, we can't control very much. But what we can control is if we participate in the market by being prepared. Because one thing, and I'll leave you with this comment, is economists are saying that the average home over the next 5 years is going to appreciate about $83,000. Some houses in certain markets have already appreciated 20% year over year. But for the sake of this, let's say it's $83,000. What else are you going to do with your life that's going to put that kind of equity, that kind of money in your pocket if you're just saving on the sideline? Buying a home is a forced savings account that pays down debt while appreciating as well, and you're building a lifestyle for yourself. So again, as I sign off today, remember, you can do it, and let's have a great day. Bye.